All right, so let's go ahead and get started here. So, yeah, for this first session, really what I would like to do, first of all, thanks so much for tuning in, everyone. This is awesome that Substack just added this feature. And what I would like to do today is really just go over the high level macro outlook on the market, then go over to our pristine path to victory trading calculator and really just show you my high level framework for trading the market. And then we'll go into a bunch of stock charts. I'll show you what I'm looking at and we can take it from there. And yeah, feel free to share anything you'd like in the chat. If there's any charts you want me to go through, I can definitely hit on those. So yeah, thanks for joining everyone. So yeah, let's get started and let's talk through what we're seeing. This is my macro monitor that I use to look at the market. You've probably seen this in the newsletter a bunch. And we've got a bunch of forces that are acting on the market right now. We have bonds, bond yields are moving way up, and we have these ZN 10-year Treasury futures that took a huge hit. We have crude oil, which is in an uptrend over here. But as you can see today, crude oil is actually falling. And then we've got the dollar index falling, which is a great thing. And we have Bitcoin over in the corner here, which is doing something just a little bit better. It is starting to move off the lows. But really, what's driving this move in crude oil? We have this Iran war, and it's creating a ton of uncertainty in the market. So we have energy prices obviously fluctuating. We've got bond prices fluctuating. We don't know when the war is ending. We don't know if the US is going to send ground troops in. We also have this meeting that's going to happen between Xi Jinping and Donald Trump. Hopefully at the end of the month, I could have pushed out. We do not know. Also, the Supreme Court overturned them. Are we going to add more on? So it's really just created a very tough market environment overall. So I'm going to go over to our index year to date performance and we can get a feel for, how has this market actually been? So as you can see, S&P 500 down, everything is down. The only things that are up right now are the Russell 2000 is up for the year, and then we have gold, which is up for the year. So looking at this from a top-down standpoint, this has been a very tough market. Now, if we look real quick and we look at our market dashboard, this over here. So a couple things that I look at right off the bat. This is our breadth indicator. You can see for today's session, we do have strong breadth. And, there's some optimism over, maybe we can get some of our European allies to help us in the Strait of Hormuz. We ended up getting a pump in the overnight futures. The administration put something out pretty much right before the futures opened. And you can see we've got some nice strong breadth today. You can see Bitcoin is doing a lot better. Emerging markets are really outperforming. Bonds are doing well. The ARK Innovation ETF is doing well. And you can see blockchain is leading the market higher. But with that said, my trend model is still at a -1. And as you can see, if we move over to these high level market trends, let's go over to these equity indices. It's awesome to get a bounce in the market, but the S&P 500 is just catching back up to its 5-day EMA. So if you're in a really bullish trend, you're going to have periodic pullbacks that 5-day EMA. Same thing if you're in a bearish trend, you're going to have periodic essentially bounces up that 5-day EMA. But as you can see, we're now above the 200-day simple moving average on the S&P 500, but we're below all of those other key moving averages. Same thing for the NASDAQ. The Russell 2000 just cascaded over the last 2 weeks. Dow Jones did the same thing. So if we look at the overall technical picture from a top-down point of view, the picture's not really that great. And it's for all those reasons that we just mentioned, all of this uncertainty in the market. And then not only that, we've got the AI disruption. We will see in the charts, there's a few really nice looking AI leaders in the market right now, but that's also causing a lot of mayhem, like in the software sector, in private equity and private credit. So let's move on from here and we will go over to some of those sector charts. Well, let's take a look. Before I do that, and before we get into the charts and the setups and all that, like fun stuff that pretty much everyone does, let's go through really my high level on how I see trading. And this is on our site, tools.pristinecapital.net. I'm going to go to calculators. This is a free tool. And this, if you're listening, this is the closest thing to a holy grail that I've discovered in trading. And so I made this into a free tool, and I highly encourage you to follow along with this. Please go to this tool yourself and feel free to mess around with this. So really, I see trading as just everything is a probabilistic event. And if you're looking at financial media, you might think like, oh, in order to do well in the market, you need to know more than the next guy, or you need to have like an incredibly high win rate. And that's not really the case. So this is what I do at the beginning of every single trading year. This is my fourth year doing the US Investing Championship, looking to get on that leaderboard again this year in the Money Manager division like I did last year. So this was to can input your starting portfolio value. So let's just mess around. We'll say our portfolio value will go up here. We'll say it's $1 million because I'm in the Money Manager division this year. And my goal, I'm going to set it at a 50% return because I think we're in a midterm election year. This is going to be pretty tough to operate in. And that's something, that's pretty much always the case in midterm election years. But I'm going to go for a 50% return because I still think that super performance is achievable. And then this is where you want to enter in your position sizing. And this is going to be completely unique to you. Everyone has a different risk tolerance. So you really want to make this your own. But for me, 25%. So let's assume we're putting 25% of our portfolio in for every trade. And let's assume that our stop out point for every trade that we take is an 8%. This is just a simulation. Now, for me, my win rate last year was slightly above 50%. But for this setting, that's pretty much my target. If I can win half of my trades, that's a really good trading year. So I set my win rate at 50%. But again, feel free to move this around as you like. So let's see, I'll throw it right here. And then for me, for the most part on my trades, I'm going for a 2-to-1 reward to risk ratio. So what that would mean is that, hey, if I take a trade, I put 25% of my account into it because I like to trade very concentrated. That's unique to me. You might not be a concentrated trader. Maybe you like putting 10% of your account into every trade. So if I were to risk 8% on each trade, a 2-to-1 reward to risk ratio would mean I'm aiming to gain about 16% of my winners. Then obviously I'm stopping out on my losers at an 8% loss. What the calculator is doing is showing you how many total trades you would need to hit your goal of 50% return, risking 25% on every trade, or sizing each trade at 25% with a risk per trade of 8%. It's showing you would need to take 50 trades, only 50 trades throughout the year. That's something a lot of people don't really internalize. Like they think they need to be trading like every single day in order to do well. You don't need to do that. So yeah, this is showing us you don't need to trade that often, about 4 trades per month, and you would need 25 winners and 25 losers. So what that also does, once you get very comfortable with this concept, is that's going to show you it's okay to lose trades. You're going to lose, in this scenario, my goal is I want to win half my trades and lose half of my trades. So now as we go and we start looking at charts in the market, this is our high level framework, at least my high level framework. I want to win half my trades. I want to, on all my long trades, have a 2-to-1 reward to risk ratio. So yeah, feel free to play with that, make it your own, and devise your own trading plan. And I create this trading plan every single year. I always print mine out. I put it in my desk. So yeah, you can see I keep mine, and this is really like my Bible. This, in my opinion, is the holy grail of trading. So now everything that we're doing in all these charts, we're really just slotting into this high level trading plan. So now, touch on the high level macro. Now let's just take a look at the sectors real quick. And I'm going to jump over to my sector list. Taking a look over here. Yeah, if we go to gold miners, these charts are pretty weak. And another, I'll show you another thing that I just might be helpful for. So the market dashboard, this stage analysis over here, where it's a short term and long term, this is really just telling me where is this asset in relation to its key moving averages. So you'll notice we don't even have to flip through the charts of these sectors. We see a ton of 4C, a ton of 4C over here on both time frames. That's just telling you this asset is below its short-term moving averages. I'm using the 10 and 20 simple moving average for my short term. And then for my long-term averages, I'm using the 50-day simple moving average and the 200-day. So you can see just looking at this, there's a lot of sectors that are below those key moving averages. So we'll start with we'll look at block and socks because those are actually doing really well today. Yeah, so block, this is the blockchain ETF. A lot of these blockchain companies, they ended up transitioning over and they essentially became data center companies. Awesome. We're getting a good day here. We're getting above some of those short-term moving averages. But overall, this trend, it's nothing special. This is pretty much we're basing out after a long downtrend. So it's okay. Now, if we look at semiconductors, which are also doing well, we just had Jensen Huang. He's talking on his event. Semiconductors are trying to repair, but you can see this right here is our monthly value area. We're trading below the monthly value area. So this is definitely a chart to watch in the coming days and weeks. Can we reestablish ourselves back inside this monthly value area? Because the semiconductors, they're such a big part of the market right now. If the semiconductors catch their stride, pretty much the market is going to catch stride as well. And now let's see, the ARK Innovation ETF, among the headline indices, this is doing the best, but overall it's not doing so well. Energy, obviously, the XLE has been the top performer among our sector groups because of this conflict in Iran. And let's jump over to crude oil. Now, there were some headlines, Trump was pretty much saying, like, oh, we're going to open up the Strait of Hormuz. It's going to be awesome. Our allies are going to help us. But then there was a bunch of commentary from our European allies, and they were pretty much all saying, like, not me, not me. Like, I'm not going to help. I don't want any part in this war. So that's where things get a lot more complicated. We have the macro, which is driving these charts, and the macro is just so uncertain. Like, Trump could say almost anything. He could put out a tweet that could send this market much higher. And then honestly, if things keep going as they are and crude oil just continues riding this 5-day EMA, it's going to continue to be a challenging market. So if we look at these sectors, financials getting crushed, China stocks crushed. Biotech is doing pretty well today, but overall the trend looks bad. Aerospace and defense isn't even doing all that well. Retail, not good. Let's take a look at the XLK. And the XLK, it's a lot of these Elite 8 stocks that really make up the bulk of the S&P 500 and the bulk of the NASDAQ. Yeah, these stocks aren't above their key moving averages either. The solar group has been one of the best groups in the market, really, because it's an energy source. This is bouncing up to its 20-day simple moving average, but not really doing anything there. You can see IYT cascade down, XLI cascade down, IGV software got absolutely crushed. But here's the thing, software really is getting disrupted. Like now, it's so much easier to create software. So there's always going to be those people that love just buying a very polished software, but then there's going to be those other people that maybe they bootstrap stuff. And so that does lead to a lot of the disruption here. And that's why we're seeing, like, in private equity and private credit, a lot of these guys, they made big investments into these software companies because for so long, if you look at software companies, like let's just look at Palantir, for example. Palantir is trying to repair, it's doing its thing, but if you just look at the fundamentals of software companies, and this is our fundamental analysis tool, Like if you look at the gross margins for Palantir, which is this G% column, 85% gross margins. And then if you look at cash flow from operations, a 55% margin. So if this company, like if they're taking in $100 in revenue, they're converting 55 bucks into cash flow from operations. So software really over the past, like, we'll call it 10, 20 years has just been like the apex business model. And so any disruption to that, that's why everyone's kind of freaking out and these private equity investors are freaking out because the moat for the most part is no longer there in terms of software. So we've got that headwind as well. Let's jump over where we saw Block, the MSOS. Many of you know I'm big to the MSOS. This chart looks absolutely horrible. Let me move my drawings over. But really, what I'm playing for here, this for me is a catalyst trade. I believe that the rescheduling final rule is going to come. Who knows what the timing is? Everyone's pretty much been wrong on that, including myself. But I believe when that news drops, this group could really enter into a strong uptrend. But honestly, right now the chart looks horrible, just like the chart for a lot of these groups. Consumer staples also took a whoosh lower. So to recap what we've seen so far, if we look from a top-down standpoint, things don't look that great in the market. My trend model's at a -1. And if we look here, let's say at our style factors, we have the growth style factor also not doing so well below its monthly value area. We've got the value style factor also not doing well. From a top-down standpoint, the market does not look good. But if we go to our individual stocks, there's actually some bright spots in the market. So let's go over to those. And this is my technical watch list. This is something that I'm constantly grooming. I share this every night with Pristine Capital subscribers in our newsletters. And if you take a look, these were the A plus stocks that I highlighted from this weekend. And NBIS, this is really just like a standout company. If I open up these annotations, they inked a deal with Microsoft worth up to $19.4 billion. This was back in September. And the stock has pretty much been dormant ever since. Then they deal with NVIDIA. And this stock, I believe this was the ideal entry point for this run that it's having. I think the entry on March 11th was ideal on the announcement of that partnership. Now today we're getting another move higher and they just announced a partnership with Meta. So as we look at this chart, this thing looks pretty good. If we look at the weekly time frame, let's take a look here. I'm going to remove these drawings. You can see we moved up pretty much in a vertical line back up to the prior highs. And then if we go back to our daily chart, here's what I'm looking at. So we have our MAX, which is the moving average extension. This is another element of our toolkit. This is showing us the ATR percent multiple from, in this case, the 50-day simple moving average. It's at a 4.9. So honestly, this isn't like incredibly extended for a stock. But as you can see, we're very far away now from this 5-day exponential moving average as well. So it makes it tough. Like I said, I think the ideal entry point was on March 11th. But yeah, this stock related to the data center space doing very, very well. And then if we go over here, SNDK, this was another name from our weekend watch list. SNDK is also doing excellent. So we look, this stock just broke out from its monthly value area today. And what's really interesting, I did not enter this stock. But what I always try to do is when I didn't enter a stock, I try to just look at like what would the ideal entry have been. So one thing that we can do, I'm going to use the replay feature in TradingView. This is a very underutilized tool. So check this out. So go to the replay. I'm going to select, I'll select right here. This is essentially right before the bottom. Now we can see what market breadth looked like on the chart for each particular day. So I'm going to now move forward. As you can see, this day that it fell, market breadth was weak. And if we move forward again, another washout day of market breadth. Then on this day, we opened up on the lows and we closed on the highs. And you can see breadth was only mixed. So I think this was a good tell if you were looking to take a speculative long here. This could have been the ideal entry. Then you can see here it broke above the key moving averages. Our stage indicators flipped positive, and this was on a day of mixed breadth. So I think either of these 2 days were pretty ideal. But now it's a little bit of a chase. If you buy after this big gap higher, a lot of times gaps get filled. But yeah, this stock, memory stock, doing very well. So far we had NBIS inking deals with the hyperscalers. Then we have SNDK, which is also doing business with the hyperscalers. That's also doing very well. The other stock that I think is worth noting here is NEO. So if you look, another name that was on our weekend watch list, NEO is a little bit of a different setup, right? Because it's not at a new 52-week high. But if we look, what I think is pretty unique here, the stock had power earnings gap on March 10th. And if we go out to the weekly chart and we look at our fundamental analysis table, we can see NEO had negative EPS over the last 4 quarters. And in this quarter just went to positive EPS. So I notice a lot of times best power earnings gap setups form when pretty much Wall Street expects a company is going to come out with negative EPS, and then it just surprises everyone with positive EPS. Look at the surprise. It was a 241% surprise. And then if we look at the sales growth, 78% sales growth. So this is pretty stellar stuff. I think NEO, out of all these names, it's a China stock. But yeah, you can see it just broke out above its above its yearly value, or excuse me. So yeah, this one is potentially a little bit fresher in its price cycle. If we go back to the daily chart, ideal entry here, I really think was the day that it put in this power earnings gap. But I think any pullbacks to this 5-day EMA are potentially good points to interact with the stock. Do I think now is a good point when you're so extended from that 5-day EMA? That's not an entry I would take. But everyone's different. So let's see. Now, in terms of stocks that I think are closer to being a setup right now, we have this stock SKM. What's interesting here is this stock actually has a large stake in Anthropic. And I do believe some of the shine has been taken off of Anthropic due to their scuffle with the administration. But if you look, this stock had a crazy advance. Let's actually measure this advance. Let's see. So I'm going to use my measuring tool. Yeah, so this stock rallied almost 61%, pretty much in a straight line. Now we are consolidating, and let's see the decline on this consolidation. Yeah, from peak to trough, 17% dip after a 60% advance. This looks like it could be getting ready. Like, let's say we get a resolution to the Iran stuff. Let's say we get more optimism on AI, or let's say Anthropic releases some good stuff in the future, or they mend with the administration. This looks like a potentially good setup if and when this stock reclaims this 20-day simple moving average. This isn't one that's incredibly extended. The MAX is only 1.7. Another one that I'm looking at is U. And this, I believe, is like an identity company. Yeah, Clear Secure Inc. is a secure identity company engaging in developing biometric identity verification tech platforms. And you can see this stock had an awesome power earnings gap. This stock had a dip, which likely was a shakeout for anyone that tried to buy up here. And now those key moving averages are catching up. And the MAX here is 4.8. Now, something that I learned when using this MAX is you don't necessarily want the lowest MAX. And again, this is the ATR percent multiple from that 50-day simple moving average. I used to believe like I always want to enter when the MAX is like close to 0 or it's 1. But the truth is, a lot of the best stocks in the market, they get overextended from that 50-day simple moving average and then they stay extended. So I'll show you a quick example of what I mean here. Let's go to Fastly. In my opinion, I think this was probably the best setup that's happened so far in 2026. Fastly had a power earnings gap. This one is directly involved in the AI theme, essentially agentic commerce and really agents crawling the web, hitting websites. Our earnings gap happened on February 12th. And if you look right now, the MAX is 7.8. It's pretty extended from the 50-day simple moving average. But if I go into my indicator, I'm going to turn on the historical MAX values. This is something I just added to the indicator set. This is obviously just very noisy to have this on your chart all the time, but it's awesome for studying stocks. So if I zoom in here, I can see Fastly on the day of its power earnings gap had an MAX of 7.4. But if you look, the MAX never really went lower. It hovered 7.7. It dipped down to 5.8. And you can see just went right back to 8.5, 9.2, 10.2, and hit a high of 10.3. Now it's at 7.8. So when you're using this MAX, it is important. If you have a stock that's been in a base for a long time, you can actually buy when the MAX is extended because those moves tend to have a very high MAX for quite some time. And it can actually be a sign of weakness if the MAX, if a stock just has a perpetually low MAX, that just means it's never really moving that far above its 50-day simple moving average. So let's see here. Right now, what I'm going to do, I'm going to go ahead and turn those off. But yeah, that's good just for using that tool. That's something I want to get better with, like just getting more comfortable buying those stocks where the MAX is extended. And this tool, it's just giving me the confidence as I look back at historical winners to start doing that. So let's see. Start moving average back on. And then let's go through a few more of these stocks. There's a few more that I'm looking at. We've got Amazon. This company, they have a big stake in Anthropic. They have a stake in OpenAI now. They could be a big beneficiary when it comes to physical AI. And this one would be a mean reversion trade because you can see this one had a huge downdraft, but now it's moving above its monthly value area. So at least in the short term, the buyers that were bottom fishing this stock in the month of February, for the most part, are now above water on those bottom fishes. So Amazon, this is another one more of like a fresher setup rather than like Fastly, which has been uptrending for multiple weeks, like NBIS, which is, like going off to the moon. DigitalOcean, this is another leader in the market. This company, AI cloud stock. And then if we look at Circle, stablecoin stock. So what's really interesting is when I look at this market from the top down and I'm looking at like the headline indices and I'm looking at what bonds are doing and what crude's doing, like this market looks absolutely terrible. But when you go bottom up and you start really doing your scanning work and you're grooming your watch list and you're looking for these stocks, you can see there's been maybe like 10 stocks so far this year that have been good. And so in an ideal environment, when the market's in an uptrend like it was 2023 and 2024, you would get way more than 10 stocks that are doing very well at this point in the year. But there have been those stocks. And also, if you think about what groups were these stocks in, every stock that's bucking this trend of just the overall market going sideways a little low this year, all been in the data center group. They've done business with the hyperscalers. And pretty much all of these, we'll call it 10 stocks that are doing well, that are at least in my universe, they've all had some sort of headline attached. So if we think back to NBIS, boom, they had the headline: NVIDIA and Nebius partner to scale full stack AI cloud deep engineering collaboration. So boom, you got a headline catalyst. SNDK, it's really the memory stuff. Neo had a power earnings gap. So what this is telling me is like, it's been a tough market, but if you've been monitoring, we'll call them like episodic pivots, um, or really power earnings gaps, there's been a few good stocks to trade. And then if we look, yeah, Fastly is pulling back today. Really, what I try to do with this list of stocks is I really just try to groom this list throughout the day. If we look at BE, this has been another really good stock in the market. And this one, what is very interesting, we've got a base, right? So this stock, it's gone up a lot. If we look at the year to date return, it's excellent. Yeah, year to date percent change, 77.8%. So this is awesome. But here's another tool that I have in my toolkit that I'm developing. And I'm going to add this to our proprietary set of tools. If you take a look, and what this indicator is doing is it's going through every single candle. And this one is saying, hey, if I set an 8% stop loss and I bought the stock on this candle and I bought it on, in this case, the close, would I still be in this stock today or would I have gotten shaken out? So if you look, I have this parameter set at 8%. So now if we check this out and we zoom in, there's a lot of red candles here, right? There's a lot of red triangles. So what this is telling us is if we bought the close in this stock and we set an 8% stop, we would have gotten stopped out of our trade, really, unless we just bought it in the last few sessions. And then who knows if we get more market volatility, if crude oil rises tomorrow, if Iran says, we're not backing down and the market gap's lower, we don't know. But I think this is a good indicator. Like, it's so easy. You'll see a lot of people online and they do all this like hindsight analysis of like, oh, this was so easy. This was the easiest setup. But it's like, if you took the setup, would you have gotten stopped out? So another good example here, and this is really all just me trying to level up my own trading. If you look at Fastly, and I just mentioned a little bit earlier, ideal entry for this stock was really the day that it had its power earnings gap. Let's say if we bought the close here, we would still be in the stock. And really, for many of these candles, if we bought the close, we'd still be in. So that's really telling us, like, hey, this has been a good stock where you could have bought in a lot of different places. And if you set an 8% stop, you would still be in it. And the same thing, if I switch this parameter, yeah, if we switch this to buying the open, which a lot of times works for power earnings gap setups. Yeah, buying the open via like hindsight, cumulative return of 71%. Yeah, you can see even more of these flip green. So to me, Fastly has been the cleanest setup that this market has offered. And then another thing I like doing, so I have my lists and I'm pretty much grooming this throughout the day. And then when people get the newsletter at night, I'm linking this watch list and they're pretty much getting like a finished copy. Like these stocks, NBIS, it's beyond its entry point. It's up like 15% today. Same thing with SNDK, maybe Neo is a little bit closer to an entry. But yeah, every day I'm shuffling this around. And then another thing that I'm doing in my routine throughout the day is I'm using the screener and I have my universe list here. And in my universe list, this is another, it's a screen I've shared. I'll copy the link and I'll put it in the chat in case you want to follow a similar universe. But yeah, I use my universe screen to narrow things down, and then I go into the Pine screener and I'm using our adaptive alpha screener and I'm looking for these value area high breakouts throughout the day. And these, they're also pinging in our Discord server. So you're seeing the same stuff if you're just in the server. But then what I'm doing is, hey, the stocks that are just breaking out of their value areas, let's take a look at some of those. And one thing I'm looking for is we just established there's been maybe 10 good stocks so far this year, not that many. Most of them are involved in AI, most of them have a catalyst, that sort of thing. So when I'm looking at these, I'm also asking myself, do these also have like a big catalyst they're moving on? Did they announce a partnership with Nvidia or Google? AEHR, pretty lackluster. Action today, this one is more like it pulled back to its monthly value and then broke out. BMNR, I believe this is like the Tom Lee crypto thing, and it's bouncing after a really big downtrend. ERAS, this is, I believe, the top performing stock in the Russell 2000 or one of the top stocks. It more so just pulled back to its monthly value area, and then now it's actually falling back in. Expedia looks decent. No catalyst on any of these. Micron, I believe this stock reports earnings later this week. Let's just double check that. I could be wrong on that. This is another thing in our Discord server in the news channel. I always pin the earnings list. Yeah, Micron reports Wednesday. So that is a nice breakout. But I'm not buying this thing after a huge gap and it reports earnings on Wednesday. Yeah, this so far of the stocks that are breaking out from value today, this probably looks like the best chart so far. This is in the solar group. The solar group is doing pretty well. Is it moving on a catalyst? No. It's really just the market's bouncing today and solar's doing pretty good. But yeah, I definitely think this is one where, yes, Edge, I'll add it to my technical list if it's not already on there. Yeah, so I'm going to move this to relative strength. And this is really the name of the game. When you're monitoring the market, you're really trying to just keep grooming a good list. Keep grooming it. See what's coming up. SDI, this is a financial services company. Shopify, TSEM. Let's see what this stock does. Yeah, Tower Semi engages in providing semiconductor solutions. Semis are bouncing today, and you can see this one attempted to break out of its monthly value where now it's just falling back inside of it. So this could be another good one to watch. TTD just looks bad. And yeah, that's the end of our value area high breakout stock. So there's this cohort of AI stocks that is doing very well, but it seems like that cohort for the most part has left the station. And it left the station, like right as the Iran war was kicking off pretty much. So those are kind of like the leaders to really follow as we start finishing up Q1 and we move into Q2. But by all means, like this isn't the best market environment. So that's why it is important, like going back to the path to victory calculator, like really go back to basics and just be like, what are my objectives this year? Because this has not been an easy tape. We're in a midterm election year, so this could continue to be a tougher tape. Midterm election years tend to be flat. But with that said, like keep looking for those stocks when they're reporting earnings. Keep looking for the stocks that are reporting partnerships with the hyperscalers. And for right now, that seems to be the name of the game. So yeah, this was our first live session. Yeah, for everyone that tuned in, thank you so much. And that's all for today. Yeah, if everyone liked this, we can do these, periodically and just get a look at the market and just kind of show you guys what I'm seeing. So yeah, if you enjoyed this session, definitely become a subscriber to the newsletter. Definitely check out our tools at tools.pristinecapital.net. And awesome, Kashik. Yeah, if anybody has any questions, feel free to throw them in. Yeah, thanks so much, Vasantha. All right, guys. Yeah, once a month. Yeah, that sounds good. Yeah, they just added this feature, so this is pretty awesome. But yeah, feel free, keep in touch. If anything comes up, I'm always an email away. I'm in the Discord as well. So take care, everyone.